Ladies and gentlemen, good afternoon. My name is Nick and I'm a financial analyst in OLYMP TRADE. Welcome to our stream about psychology. Yeah, so we are going to look at, well, the most interesting psychological problems, during your trading. And of course, so we will discuss one of them. Well, as usual, so before we start, so please let me know in the chat that everything's okay, that there are no technical problems. Yes, and you can hear me well, you can see me well, and everything is okay. Mm-hmm. So just greet me somehow in the charts, write that everything is okay, and we'll start our discussion. Well, okay, well, I see that, well, I hope that everything's okay. I hope that there are no technical problems. Yes, and the sound and the video are okay. Well, that's great, guys. So we today we are going to discuss the following psychological problem, which is called a crowd effect. Yeah, so what is a crowd effect? Actually, there is such problem, and usually it happens with traders who work, for example, in a group. Yes, so when we speak about, for example, like something like online trading, yes, and something like that. So when you are trading online with somebody, so what is a crowd effect? Yeah, so at first, so let me do something like that so that you can see the presentation. Well, people who work, guys, and communicate in group often take the same decisions. Yeah, so well, actually, so working in a group can lead to an absolutely identical points of view. Yes, well, this is totally true. Yes, well, speaking about the proofs, there was such type of an Ash experiment. Yeah, so this experiment, well, actually, it happens in 1950s. Yes, and from Solomon Ash, one of the psychologists. So he did the following experiment. Yeah, so well, each student viewed a card with the line. Yeah, so it was something like that. So as students, yes, so he had or she had a card with the line. After that, on the second card, the second card was given with three lines. So one of these line uh, was exactly the same as the first one, as this one. And the other two lines are totally different. Yeah, so they are totally different. They can be longer, they can be shorter, and so on. So a group of students will actually was asked to choose the same line which is similar, which is identical to the first one. What is really important here that in this group only one person was well, like a real person. Yes, all others, they were actors. Yes, and all other people, so for example, let's imagine that nine of them, so they say aloud that, okay, so line B is identical to this line. um, it was made deliberately that the person who was not an actor, well, he had to answer the last one. And of course, he could hear all the answers from all members of this group. And actually, he usually in 75%, he or she agreed to the group that yes, for example, line B is identical or line A is identical to the line to the card which was given. Yeah. So, well, it means that actually people they tend to uh, to take the same decisions because you don't want to show that you are maybe like stupid or something like that. So if everyone tells that, for example, like that this wall is white, yes, so of course, well, sooner or later you will believe that it is white, regardless that actually it can be black. So this is the problem. And what actually happens, what is going on financial markets? So I would like to show you Russian stock market in 2008. So this is one of the most famous Russian stock index. Yes, well, from Russian stock market. So you can see that in 2008, you know that it was a subprime crisis in the United States, and well, the global crisis, well, all around the world, and well, actually, all the year, almost all year, well, a Russian index was going down. Well, of course, it happens well because of the crisis, but also, well, people they were in panic, and well, as a crowd effect, so they started selling assets because they were panicking about their money, about everything. But after a while, you see that well, the trend has changed. So this is the consequences of these are the consequences of the crowd effects. Yeah. Um, so again, so if people work together, so they often take the same decision or decisions. Okay, guys. Well, do you have any questions? Do you have any questions? Mhm. So a really short psychological mistake, just in case, just for you to know about that and be aware. Yes, be careful with such things. And so, well, all clear. Well, that's great. That's great. Maybe you have any other questions, not just about psychology, about something else, about technical fundamental analysis. Well, I'm ready to answer. So if I can, of course. Hmm. Well, any other questions? Any other questions? Not just about psychology. Well, greetings to those who have just come, but actually we are finishing. Yes, almost, because well, today we were discussing the psychological mistake, which was called crowd effects. Yeah, so please watch this video, watch the recording of this video just in case to learn about this mistake. Well, if you have any questions, guys, so please, I'm ready to answer. Nothing. Well, that's great. Well, in this case, I would like to wish you good luck, a good trading session, a good ending of the week. Well, next week will be the last one for this year. And well, of course, I hope to see you all again next time. So next time, we are going to continue our discussion about psychology and all that stuff. Thank you very much for coming. Oh, well, question. Uh, oh, well, big. Okay, so I have, well, if one wants to turn 30 US dollars into 300 US dollars, which strategy would work the best? Well, this is a good question. So it depends on time. Look, if you so for example, $300 from $30, it's more than it is around like 3,000%. You see, well, speaking about, for example, the period of time of 1 year, uh, these all the strategies which you use, well, they have to be really, really risky. So this is quite a risky thing. You have to realize this. So be ready that maybe, so you will lose your money. Yes, all the sum of money which you have. So, well, speaking about like the strategies, unfortunately, guys, well, there is no such thing as like something universal that can make money out of the air. Yes, well, it's impossible. Um well, like let's be realistic. Yeah, so well, it's definitely better to try to use like couple of strategies and see if they work or not. Well, for example, for you for your trading style, and after a while, so you can try to increase the sum of money, and so that's why gain more money. Well, speaking about strategies, for example, I prefer MACD professional. Well, this is the strategy which actually I invented. Well, and this is the strategy which is based on three indicators. Well, moving average, exponential moving average, MACD plus parabolic. So you can use these three indicators to find signals to trade up or down. But sometimes, of course, sometimes this strategy does not work well. Well, it happens. It happens. So be ready for these. How can I manage my emotional greed? Well, this is a good question too. So look, well, speaking about me, for example, yeah, well, I prefer to make pauses. Yes. So for example, if I lose a lot of money or even if I gain a lot of money, so it is definitely better to make a pause. Yeah. So just switch off your computer. Don't do anything. Yeah. So just let's say just for like several days, maybe 1 week. Yeah. For me, well, 5 days are optimum. So well, I can make a pause and I can just stop trading during 1 week in my opinion. Well, during this time, so uh, you become like more relaxed, yes, and of course, you start well after a while. So you start trading without thinking of greed, without thinking of money. So it's more like relaxing, yes, behavior and condition. So that is definitely better. That is definitely better to make pauses. Also, there is such thing, guys, as there is a method which is called, for example, a teacher and a student. Yeah, so something like that. So imagine that while you are trading, yes, imagine that a student, your student, is sitting next to you. Well, somebody is sitting next to you. So this somebody, he does not know anything about financial markets, anything about options. Well, nothing at all. So you are trying to explain to him, well, the basic features of trading. So you are trying to explain why you are opening this or that position. Yeah. So well, in this case, look, you are so let's say so you start doing something like more um, you start finding more reliable signals in this case, yes, and actually you start controlling your emotions. So let's say so this is a really good technique. Try it. Mm. Well, it happens like 500 bucks. Well, and you can lose them like just this is trading. This is how it works. Yeah, so well, if you don't want to have risk to take risk, well, you have to go to the bank, definitely. It's not for you. Well, speaking about trading, these operations are really, really risky, but really profitable on the other hand. Yes. Hmm. Well, great guys. So it's time to say goodbye. Well, thank you very much again, and well, I hope to see you all next time. So bye bye.